Good afternoon, everyone. My name is Paul, and I'm in third, and everyone is laughing so hard. So hard right now because for the last 3 minutes, okay, only 2 minutes, I've been talking away and talking and talking and talking, and Leanne came running in from the living room, a.k.a. the conference room, with the portable phone in her hand and walked up to Mary Jo, and I looked at her and I looked at my headset controller, and it's flashing red, which means I'm muted. So I think I can get myself under control now, and Mary Jo would just stop laughing in front of me. You know, when we would do these with Mary Jo in her home and me in my home and Leanne someplace else, it was much easier to regain our composure. But with Mary Jo sitting over there laughing, it's very hard for me. So I will take a deep cleansing breath, which I learned when I had my only two children. Not that I'm sorry. I shouldn't have said that. Mary Jo's laughing again. Okay. Now, we're going to compose ourselves. We're going to say that my name is Paul, and I am a nerd, and this is the May 2012 virtual user group meeting that we affectionately call the water cooler. This is our Tabs 3 and Practice Master virtual user group meeting. Today we are leaning towards the Tabs 3 side because our topics for today are the difference between client funds and trust accounting, which is Mary Jo's topic for the day. And my topic is the difference between date-based and period-based reporting. Before we get started, though, I want to point out that you probably have something on your screens over to the right that looks something like this. And if you notice, there's these icons in a little box that jumps off to the left. And the topmost icon is arrows pointing to the right. And if you click that icon, the big box will slide out of the way. These will move over to the right. And this icon then will become arrows pointing to the left. And that means that if you click it again, this box will slide back into focus. Okay? Now, why would you want to slide it back into focus so you can see this box? Because it's probably covering up my screen, and the reason for that is to type a question. You can either type a question and hit enter, and it'll show up, and Leanne will notice it, read it, get it answered, and make sure that you've got your question answered. Or if you're feeling particularly bold today, you can click this icon, which looks like a hand with an arrow pointing upwards in front of it. That means you're going to raise your hand. Leanne will unmute you, let you know that you're unmuted. You'll get a chance to ask your question, and we'll mute you back up so you can keep eating lunch, because that's what everybody does during the virtual user group meeting. So without any further ado, I'm going to click this and this, and I'm going to give control to Mary Jo, and she's going to talk about the difference between client funds and trust accounting.
Well, good afternoon, everybody. We're just having entirely too much fun over here today. But client funds and trust accounting. Which do you need? Which don't you need? Why do you use one over another? Why would you use both? All these are questions that I hope to cover today. So we're going to start with why would you want to use client funds or trust? First, and number one reason that I always say is to avoid unallocated payments. We always want to put those credit balance in for retainers or flat fees or things that give us that negative AR balance, and you know, it messes up our financial reports, it messes up our unallocated payments report. We don't know how to get rid of them once they're there. So this alleviates all that. If you're putting that money in client funds, or if it's retainer money, or you're putting it in trust if it's IOLTA money. So we're going to tell you how to do that, how to show that on the statement, and just some other information. So we'll start with client funds. If I'm in Client Manager, come over here. Well, I don't think I do have control. There I am. There we go. Okay, sorry about that. All right, so if I'm in Client Manager and I get a client that has, let's see, I think Martin Wilson here has some negative AR balance up here. Well, this is because that payment was entered just as a payment. We haven't billed for this WIP time yet, so until we prepare that statement, we're going to have this negative $1,000 sitting out here. It's going to show up as unallocated in our general ledger. It's going to show up in our unallocated payments report. It's money that the system doesn't think that you've actually earned yet, so it's a credit balance. But if we had put this in client funds, it would show down here. This would not mess up my AR, and as soon soon as I build it, I can also set it up to have automatic payments from client funds, so that money would then just apply to whatever that WIP was. So that can be done. If I click on client funds and I just say new, it's going to take me out here to my client funds screen. And here I can come in and I can put the date. You know, we can say that it's, whoops, forgot that we have a different date here for our system. So I can come in and I can make a deposit to client funds for that $1,000. And then that would sit out there in that account waiting to be applied. As soon as I prepare a statement, that'll automatically pay that if I set it up to do that, or I can manually do that. I can also pay this to third parties if I wanted to. And generally, this is money that's going into your operating account that you are free to spend. It's not trust money. This is money that you're sitting out there waiting to either pay for fees that you've earned or for a third party, a witness fee, something like that, out of this money, out of that retainer money. So this is a way to keep track of that. And then actually on the statement, if we go out to a statement, I have one that I had put a payment in already. And I believe that was for our Paul Purdue client. And so here you can see that I've got a $500 amount sitting in client funds, and I've got this fee WIP, and I've got, you know, I do have a payment in there already that the client had sent in. So I do have a couple of different things here, and when I just do a generate statement and do a draft statement here to look at this, if I scroll down, you'll see that it has automatically put the payment down here. You can see it had the payment that the client had put in, which was the combination of these up here, but then it also had my client funds payment here at the 521. And if I scroll down a little bit further, I can show that I had my deposit to client funds of $500, and then it also had a payment right here. Now, this all happens behind the scenes. It's all automatic. Now, a lot of times people didn't use client funds in the past before version 16 because there was no GL integration. They couldn't carry these payments over to General Ledger and put them in their operating account and then bring them back out and post them where they needed to. But with version 16, they've come out with a client funds integration. And so you can go in and you can, let me get over to that screen. You can actually set up, oops, my integration screen. In my GL's integration, there's now a client funds transaction. And you can allow posting of client funds transactions, and you can actually configure the client fund integration. Right now, if I just click on what we have, I've got it going into my operating account when that payment comes in, and then I'm putting it in a client funds holding account. And then as soon as we prepare that statement, it makes the payment, it pulls it out of there and would put it. It would not credit or debit my operating account again, but it would move that money from the holding account into fee income or cost income or whatever it would be for that payment. So that is a new feature that just came out in 16 that allows you to have that integration. As far as getting that to show up on the statement down below, that's just in our client screen. And if you go into your client AR fund balance tab, you can set all that up right in here. I can say that I want it to show on the statement. So here's my statement format, and you can choose from detail, summary, or none if you don't want it to show. And then here's where I can set up that automatic all. Right here I'm saying that if there's any kind of fee WIP out there, just automatically apply any client funds I have to all of those transactions. And then it will leave whatever balance is left in there. You can also set minimum balances and target balances and bill for those as well. But this is a good place, like I said, to keep track of retainer money, flat fee money, just overpayments, things like that that you don't know what to do with. Instead of letting it go to unapplied, you can just deposit that remainder in client funds. Are there any questions on client funds?
I don't see any questions.
Okay. Now, trust accounting is a separate module that we sell, and I'm just going to go over here to our little trust account icon. And this is where you're going to put true IOLTA money. This is, you know, settlements that come in, any kind of, you can also keep track of overpayments, but usually with trust, you're actually depositing this money into the IOLTA account, and then you're pulling it out when you have to pay fees for yourself or for third party, or you're distributing those settlement checks. And you also can write checks right out of this account, and you can reconcile this account. So in client funds, it's just kind of a basic holding place. All that money's still going to operating. It's posting in your general ledger. You're reconciling it over there. Whereas trust, you have that opportunity to have that totally separate, not commingled with your operating funds, and it gives you that ability to do matter by matter and see all that transactions and activity that's happened. This also can post onto the client's bill, and again, when we are in tabs, go back over here. In this case, it would be under Statement Options, and here we've got a Trust Integration button, and we can go ahead and say we want a detail or a summary, and then that will again post onto the client's bill at the bottom. In Trust, you have the you set up your regular trust account for each matter as you need them. Everybody's in there. This is integrated with tabs. So if I went over to my trust account list, I can go into my trust account screen, and if I did the drop down here, every single client that I have in tabs would be listed here. And if a trust account is set up, it has a number, because you can set up multiple trust accounts. If you're at a firm that has, I've got one, I think that they have like 12 different trust accounts that they deposit into, you would have bank account number 1, 2, 3, 4, 5, 6, 7, all the way on up. And if they have not had a trust account set up yet, it would just say tabs. And so you can just choose them. If I wanted to set one up for Martin Wilson's 00 matter, I just say, okay, it knows his information. I can see that it's new, and I can just save it. And I've just opened a trust account for him. So it's very simple. And then I can deposit money by just coming into my trust transaction screen. I can go down and choose my bank account, do a type of a deposit, and then I can choose my date and my amount, and I can post payments here, or deposits. And then I can just come in and write checks. It will ask me what bank account I want to draw it on, what check number. If you're not cutting checks directly out of trust and printing them from here, you can manually write your checks and come in after and actually put in a check number and print that or record that check here. You also see we have a little tabs 3 payment tab up here. And what this does is if you do want this payment, let's say that you're writing a check to the firm, we set up a special payee called firm. It will know by that firm designation that this is a tabs 3 payment and that you want to go ahead and post that. And once you've made that payee be firm and click on the tabs 3 button up here, it will then ask you to verify that that's the amount you want to go to tabs, and it will create that payment entry for you automatically. And so when you go to tabs, it'll be there under payment verification. It'll show up on underneath that matter, and it will post. And then at the bottom of the statement, you can have all that activity appear just like we did with client funds. So that's available. There's also reports for both. So if you needed to get a running total of all of the trust money by matter, you can come in. There's several reports in trust that you can do that with. We have a trust account list and a client trust ledger, so you can see all the activity just like a client ledger in tabs. You can see all the trust ledger activity with detail. Or you can just do a list with each of the different matters that you have trust money in a total. You can get as detailed or summary, whatever you want there. You can void checks. You can do 1099s. You can also integrate trust with AP with the 1099s. So if you have duplicates of trust money and a vendor and AP that you need to combine it, you can do that, or you can print them separate. So all of that is available in trust. You also have that in client funds as far as reporting goes. You can do a list. If you go to your client screen, we have some client reports, and I believe there is a client funds report right over here, and you can get a list of all of the different matters that you have client funds out there for and balances. So are there any questions on the differences between client funds and trust?
Mary Jo, I've got 2 questions on client funds. So let's see. The first one, when you deposit into your operating account, is that its own GL entry, or is that done when you're putting into the client fund?
It's combined. What happens is when you put that deposit in client funds and you're integrating with general ledger, it will go ahead and it will deposit that, make that entry for you to put that into either that holding account or and then your operating account. And then when you actually make a payment, it will move that automatically as well without creating another duplicate deposit into your operating account. Does that answer the question, or is there further?
Well, I'll let you know if further questions come in. But the next question is, for client fund GL integration, do you recommend setting the GL account up as a liability account?
Yes, we do. We do, because then that will carry forward. If you've got client funds balances at the end of the year, that will carry forward to the next year. You won't lose it. If you set it up as an income account or an expense account or anything like that, you'll lose that amount. So you want to, we always set ours up as liability accounts. Another question I get all the time is, all right, well, we've been using client funds all along for some things, and maybe we want to expand and get trust. How hard is it to move balances over? And it's very easy. You would just make a withdrawal out of client funds and come over after you've, if you don't have the trust module, you can purchase it. If you already have it and you're just not been using it, you can move that by just making a deposit over into client funds or into trust, and then we can do an initial reconciliation to reconcile all those deposits out of there so your balance is correct, and then you just go forward from there. And so you're just making like a mass journal entry, in trust to kind of get that money over there for each matter. So it's very, it's very easy, and all of your other transactions can still stay in client funds. You can still do your reports and see that activity. You're not losing that in tabs. You're just moving that balance over to trust so you can then start to write checks and do things where it should be. Any other questions?
No other questions.
Okay, I will turn it over to Paul.
Thank you, Mary Jo. So the bottom line is, if you want it to go right into your account, it's a client fund. So if you were to take something in the attorney and say, I deposited it into the trust, and they were to look at you and say, but that's our money, this is the answer to that. And so many people have been reluctant to do that in the past because of the lack of integration. Now it's there. Now it's just an automatic thing, and we use it here all the time to record prepaid minutes. We have a lot of clients that use both trust and client funds, and a lot of them that should be that just aren't familiar with client funds. I'm going to talk about another difference within the software. I'm going to talk about the difference between date-based and period-based reporting. Now, a little bit of background. Period-based reporting is a throwback to, I don't know, I suppose you could say a simpler time. Period-based reporting is what happens when you close your month in tabs. It is why you close your month and your year in tabs, because it is what we use, that is what we use to determine the end of one period and the beginning of another. Date-based reporting is a more modern technique. The reports and tabs have always been period-based from the beginning and then have been switched over to date-based over time, but there are still about 4 or 5 of them that are still period-based. So what that means is, if you were to print a January bill, but you printed it in February, and some of our firms will actually put the date the bill is printed on the statement, others won't. If it was a January bill, they'd put the end of January as the date of the statement, but many of them will just let it default to February 2nd, February 3rd, February 4th, even though they're printing a January bill. And then when they're done with all those January bills, they'll close the month. Well, if you are printing that bill in February and you use a date-based report to report on what was billed in January, those items won't show because the statement date is in February. If you're using a period-based report and you don't close January until you're done with all that, even though you may not close January until the end of, until the 5th or 6th of February, then all those things that you printed in February that were really January bills will still be considered January bills. So it has a lot to do with the dates that you're using, and there's a lot of thought that needs to be given to that. But bottom line is, if you don't understand the difference between the two, and you're using 2 different reports and trying to look at the numbers and compare them, and one's date-based and one's period-based, it's almost invariable that they're not going to match exactly because of this difference between what date and period-based means. Now, we have an article on the knowledge base in tabs3.com in support that pretty much spells this out, and it is right here. It is Article R11383. You can see that up there. I think it's somewhere else here. There we go, R11383. And this particular article goes through the differences between date-based and period-based reports. And when I first came to this article, I was looking for this. This actually tells a lot of different things about reports. And if we go to the bottom, and a little bit further, there we go. We have here reports with date-based information and reports with period-based information. Now, these are the 5 reports that are left in the system that are period-based reports, and all other reports, and these are the ones where it really matters, are date-based. So if you were to print a timekeeper productivity report, and you were to compare it to a timekeeper analysis or a timekeeper, there's a couple other timekeeper-related reports that are more date-based. If you were to compare those 2 reports, you'd find differences. And so if you are using a lot of date-based reports and you're using 1 or 2 period-based reports, you either have to understand that those differences are going to exist, or you have to try and focus on something that is going to be one or the other. Now, many of these older period-based reports have been replaced by newer date-based reports that pretty much will give the same sort of information. And the way to tell that is this. This is actually new, and when we came to look at this today, we were like, wow, this is hiding that other information, because all of that stuff that was down below that shows the different types of reports is represented up here with these checkboxes. So if you say, I'm looking for a report that's only period-based, and you check that, and then scroll down, you will only see the period-based reports. But if you say, I'm looking for a report that shows me billed fees, billed hours, billed costs, and amount due, and I only want to see date-based, well, then what you can do is you can show the period-based and note that there are none that show that, and then you can look at the ones that do show it and say, these are reports that are going to give me exactly what I need. You can also simply come up here and check period-based, and you will see those same 5 reports from down below. So basically, when we click on Show Info here, and it shows the rest of this old style of the knowledge base article, where it's listed in separate groups, that same information can be achieved by coming up here and clicking the appropriate checkboxes. So what does that mean? Take a look at the period-based reports, then take a look at what you want in a report. I want billed hours, billed fees, billed costs. Then look at those reports, find one that gives you what you want, and make sure it's not period-based. Because the period-based reports are going to clash with the rest of them. If you can find all date-based reports, then everything's going to match up and everything's going to make sense. So to go over that difference again, if I print a whole bunch of bills at the end of January, and before I close January, I go ahead and print one more bill in February, and then I close the month. I do my month-end close, or my clear, what's it called, advance month, Mary Jo, in tabs. I advance my month from January to February. That bill that I printed before I did that is going to be considered in January for a period, bucket-based report, and a period-based report, and not in January for a date-based report. Okay? So once again, do a whole bunch of stuff in January, don't close my month yet, do a couple more things in February, then close my month. In a period-based situation, those are all lumped together as January. In a date-based situation, everything I did in January is considered January, but those few things I did in February will then carry over to February reports. We recommend that you use a little care in how you date things. If you're just getting done with your January bills and you have a couple to print still in February, or maybe you print all of them in February but you want them to be considered January bills, consider dating them the end of the month. That's merely the date that's used to reflect what those transactions encompass, and dating it in January really shouldn't have much bearing if you want them to count in January, and then use all period-based reports. all date-based reports. If you don't really care and you're willing to deal with the differences, or you're going to get into a situation where you're using exclusively date-based reports, then you really don't care how things carry from one month to the next, and when you close your month and when you don't close your month. It's really just going to be a matter of looking at it from a date standpoint, and that really, in my mind, is the way it should be. You should be able to go in to all reports and simply say, I want them for January, I want them for January and February, whatever date range you want to specify, and it should go based on the date of the transaction. But we still have these few older reports that have not been switched over yet, that probably will be switched over in the very near future, and currently are period-based and currently are prone to potentially cause those sorts of problems. Do we have any questions, Leanne?
No questions.
No questions. Well, either I was too obtuse or too clear, or very clear. So if you find that you have questions after the fact, or you need to clarify some of the things that Mary Jo said about client funds versus trust accounting, by all means send us an email, give us a call. Our number is 1-800-475-8104. Say hi to Ruby. Or you can email us at paul.purdue, like the school, not the chicken, P-U-R-D-U-E, paul.purdue@attorneycomputersystems.com. Next month in June, we're going to have our June virtual user group meeting, I believe, at its regularly scheduled time, which will be the last Monday of the month. And the topics for next month that we picked are how to adjust any payment, and how to use filters as a quick alternative to reports. So two really requested topics, if you will. A lot of people are always wanting to know how to adjust a payment, whether it's to give money back to the client or to move it to a different matter or to move it into client funds, or basically just to make an adjustment to a payment that's already been posted. And then I'm going to look at how to use filters as an alternative to reports, because sometimes printing a report is not green, and there's quicker ways to get that information. So until next month, we will hope that everything goes well, and we'll see you next month. Thanks so much. Bye-bye.